Welcome back to Next Week on the Trading Floor. I'm your host here on Wealthion, Andrew Brill, and we're here to help you keep and grow your money. Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets, and in conjunction with Market Rebellion, we'll give you picks that will help you in the week ahead. Now I'd like to welcome back Justin Nugent of Market Rebellion. Justin, nice to have you back with us this week.
Thank you so much, Andrew.
So, Justin, a lot going on this week. We had the Fed meeting. We had CPI numbers. The market keeps rolling on.
Yeah, absolutely. And what we're seeing a lot of is kind of what we thought we were going to see. We're seeing deflation. We had the CPI 3.3 versus 3.4 expected. That's down. It's still increasing, but it's increasing slower than we thought, and that's a win. Month over month CPI was 0.0 versus 0.1 expected, 0.3 previous. That's a win. We saw the Fed pause anyway. And, we knew that they were going to pause. They tried to talk tough, but the market finally said, hey, we don't believe you anymore. Fool me once, shame on me. Fool me twice, we're still going to buy it.
Fool me once, shame on you.
Yeah.
Fool me 800 times, shame on me, right?
Yeah. I'm pulling that George Bush from way back then. Fool me, you can't fool me again. That's right. The vibe I'm giving off here. But regardless, they said, we're buying it. We don't care. We're buying it. And the Fed is obviously happy about the information that they continued to get, because the PPI month over month was minus 0.2 versus an expected gain of 0.1 and a previous of 0.5. That's a win. Initial jobless claims, guess what? Also a deflationary win, 242 versus 225 expected, 229 previous. And today, what do we get? The May inventory report that was, minus 0.1. And that was better than expectations as well. So really hard for the deflation deniers to make a case here. I'm sure we're still going to see Kashkari come out and say the same stuff he's been saying, be like, rate hikes, they could still be on the table. They're not expected, but they still could be on the table. But Andrew, I'm looking at the table, and they're not here. The rate hikes are not coming.
Yeah, and Chairman Powell said as much. He says, I don't see any rate hikes in the near future. As a matter of fact, they seem to have penciled in one rate cut towards the end of the year. Some are looking for two, some are looking for none. So there is a little division in the ranks there. When you look at the dot plot, there are some that say, oh yeah, we should get two. Some that say, yeah, definitely one. And then there's some that say, no, we shouldn't be having any. But the economy continues to roll on. The markets continue to hit new highs. And another thing that continues to hit a new high is your pick for last week, which was the S&P 500 ETF, which you said was a longer term bet, still went up this week.
Yeah. Oh man. I just want to thank you, Wealthion and Andrew and Market Rebellion, for allowing me this platform to make a prediction that literally nobody else is was a fan of here. Now it's starting to look like we could get even higher than that, right? 600, we're still keeping it. 600 for the SPY, S&P 500, 6,000. We're halfway through the year. We've already done, 13, 14%. And first half isn't even done. From here, we need another maybe 10.6%, I believe, from where we're trading right now. Right. That equates to about 26% gained throughout this year, which if you look at 2023, we gained a little more than 26%. If you look at 2021, we gained a little more than 28%. If you look at 2019, we gained a little more than 31%, all respective to the SPY. So for those out there who thought 600, that's crazy. It's not actually so crazy after all for a bull market year.
Last week when we spoke, it was around 525. We had last check, it was right around 542. So it is headed in the direction that you predicted it would head. Let's see if it continues to do that. Now, in the penalty box last week, we went to Vail Resorts. Vail Resorts had fallen off a cliff with their earnings, and it was just about even for the week. Didn't really go down too much, and it was on a little bit of a roller coaster ride, but kind of ended where it began last week.
Yep. That's okay. They went down, they bounced up a little bit, ended up with a wash on that one. Totally fine.
Yeah, a wash isn't so bad because you're not losing, you're not gaining. You like to gain, but we did hit on the S&P 500 ETF, and then the unusual options activity, we had to Robinhood, the trading platform, and you had the calls on that one.
Yeah, there was an opportunity about midweek where you could have taken profit on some of the bullish positions in Robinhood. Now it looks like we're probably pretty close to even there. But for what it's worth, even though those particular options expire today, I still believe in this breaking through that volume gap and heading up into those 33s and 34s. It's obviously not going to happen on Friday or on, Monday. But if you were to maybe get those July 19th strike calls, or expiring calls rather, I think that you still have a really good shot at seeing Robinhood continue to move higher.
All right, so those are the recap of last week. Let's head on over to this week's picks. And you had mentioned to me NVIDIA a few weeks ago, and I actually hopped on board. This week alone, it's up 10%. We know that it opened up Monday, splitting 10 for 1. So if whatever you had 10 times as many shares as you did. And this week alone, it's up 10%.
Yeah, NVIDIA's a really cool story because in the same way that we do the measured move in the SPY, that's what we used back when NVIDIA was trading at 877, I believe. And I still have the screenshot there from April 26th when we were telling Rebels, hey, the measured move here is actually 1191. And yeah, they're probably going to split. And yeah, they're probably going to beat and raise and all that good stuff. And what do you know? Not only did they break through that level, they're way above it now. And still, we're going to try and learn from the mistakes of analysts past. And we don't want to maybe call out any by name, but there's a rather large hedge fund on March 28th that removed NVIDIA from their model portfolio before the earnings and kind of sparked that very large no-news sell-off that ended up occurring there, and then would later come out to buy back in and raise their price target in NVIDIA up to 1,200. And so we're going to learn from that mistake and say, hey, just because it's up, that doesn't mean it can't continue to go up more. We actually saw a bunch of unusual options activity. That's a technical term. Today in NVIDIA, 30,000 calls out in next week's 137 strike and 33,800 out in August. That's a massive, massive trade to make. And, it doesn't seem to be phasing these smart money buyers that NVIDIA's already up a lot. And so it's not going to phase us either. So, yeah, I think NVIDIA could rise this week. And I think this is just a name that you stick right with.
So those 33,800 August calls, is that also at 137 or is that higher than that?
That was at the 127 strike. So the way that I phrased it to Rebels today is that there's a bit of a long shot that you could maybe take out next week's calls at the 137 strike. They're at about 131 something at the time of recording. Those are very cheap. And, if it works, that's great. But what we usually like to do is use at the money options, which would maybe be more like a 130. And that'll up your probability, potentially lower your potential reward. But if they just go up a bit, you could see those 130s do well. And maybe the 137s don't quite make it there. It's all on whatever your risk tolerance is and how much you want to consider doing. But as I said, the August ones are in the money. So there's very little extrinsic value in those options. That means you're really just more of a stock replacement, gaining leverage for less capital type trade. And I love them both, honestly.
So we usually, Justin, usually right here we go with our loser or the stock that we put in the penalty box for the week. But you want to double dip into the winner of the week and go with another AI stock, and it's C3AI, symbols AI. And tell us about this stock that you're looking for a winner on.
Yeah, we follow the smart money at Market Rebellion. It's what we do. It's what we love to do. And I can't deny a lot of what I saw today was very bullish, and it's targeted towards next week. So rather than trying to find a bearish pick, I think it's good to roll with what the smart money's doing. We saw yet another very, very, very large bullish trade out in C3AI. Now, these are not the OpenAI ChatGPT people. These are an enterprise software company. But hey, their ticker symbol's AI, so they probably get swept up into some of the AI tailwind regardless. Now, I don't know what their reason for buying this might have been, but there is the possibility that this is Friday, today's little sell-off leads us to a level of support around 28.50, and we might be able to see a bounce into that swing high from just a couple days ago at 33.11. That's personally what I would be angling for, and if I were taking this trade, I would keep it very, very light and tight, which means that if we broke below, say, $28, I would cut this, because what we really, really care about is trading with discipline. And that means if a trade starts going against you and it breaks through a level or it breaks one of your rules, you get out. You move on to the next one. There's always another trade out there. But it's a cheap option. So I think it's worth a shot.
AI is trading right around 28.92 as we record this. So if you're looking for that, that 28.50 support level, if it gets down there and a $33 sell, you're making, 10-15% right off the bat, and that's a pretty good gain to get very quickly.
Yeah, and I would add that the options are absurdly cheap, despite the fact that it's a high beta name. The 29.50 strikes that they were buying, which are just a hair out of the money, they got those for just over 30 cents a piece. Now, option math, if we actually do make it up to $33, then you're looking at options with an intrinsic value of $3.50. So, that's a little more than a 10x. It's rare, but it's not something that it's something that we see from time to time in these unusual option activity trades. And it's something to keep on your radar if you want to use just a little bit less capital to make a trade like this.
So we head on over to our unusual options activity. And this is a name that's, and a stock that kind of goes up and down. It's all about streaming, and that's Netflix. And there's not a lot of people I know that don't indulge in Netflix in some form.
Yeah, and they have some cool tailwinds with their NFL streaming stuff and all the potential ad rev that they could get from that. But moreover, the story that I'm more interested in is one of the technicals. Surprise, surprise, it's me. So of course I'm looking at the chart, and if we could pull that up, I'm noticing a consolidating wedge that breaks out into another consolidating wedge that, what a surprise, breaks out right here again. And so the smart money came in. They're buying the 700 strike calls in Netflix. They got them for as low as about 85 cents and as high as about 175. And these, what you could theoretically do is bump these down into the at the money strike of about 670 to up your probability here. But because these options are just so cheap, if you want to take a nice, cheap, long shot on these OTMs, you could even go for what's called a call debit spread, which means that you could look at the 700s buying those and the 710s selling those for what would be about a 4% gain in the stock from here to Friday, which is not incredibly impossible for Netflix, especially as it looks to break out of this wedge here and as it's already starting to do. And if that does take place, you would get those debit spreads for about 88 cents. And if we expired next Friday at 710 or higher, you would be looking at what would be an 11x trade. they would be worth $10 from that 88-cent investment. And I just love those asymmetric potential rewards. So those are some different things that you could do with Netflix.
So that would be a new high for Netflix. I think their 52-week high is about 675. If you're looking at 700, 710, that's a pretty big, nice gain right there.
Yeah, I think it's possible, and so does the smart money here.
All right, so let's recap. NVIDIA, you think that's your winner for the week, and we went with a second winner, which was also AI, which was C3AI, a software company, a software artificial intelligence company, and the unusual options activity is Netflix. So those three stocks you think are going to do pretty well over the next week.
Yeah, the theme here is stick with what's working, look at the data, look at the chart. Stocks are going up. What stocks are doing the best? It's growthy, high beta, AI-related tech stocks. And it makes perfect sense. It's looking a lot more bullish out here than it has throughout the rest of the year, and I am here for it.
I will tell you that a few weeks ago when we spoke, you did hype NVIDIA. I did get in. I'm up about 11% so far. And I have 10 times as many shares. So, it's all working. It's not the only trade I've made some money on. So, you need to listen to Justin. You need to listen to Market Rebellion, and you need to, just do your own research as well. Make sure that you're comfortable with whatever it is that you're doing. So, I know that there is on Justin, I know that there is on your advice money to be made here, but obviously you want people to be comfortable and do their own research.
Always. It's the most important thing. What I always say is that if you're not familiar, especially with options, open up a paper trading account. It's the only way that you can actually say, hey, there's zero risk in what I'm doing. If you're paper trading, that means that you're not using your real money, but you're using the real stock figures. You can find those on Thinkorswim or a variety of other platforms. And just try paper trading, see how it goes, see how theta goes, see how the trades go, and find out what you're comfortable with in terms of risk, and try and trade like you actually would trade in real life. I think that's the best way to really learn what you're comfortable with, and also to see the power of some of these trade ideas.
You can also head on over to marketrebellion.com. They have a bunch of educational videos that you can watch that if you're looking to get into options, it's a great place to start.
Absolutely.
Thank you for watching Next Week on the Trading Floor. We hope you enjoyed the insights and forward-looking information from Justin and Market Rebellion. If you need help being financially resilient, please head over to Wealthion.com and sign up for a free, no-obligation portfolio review with one of our registered investment advisors. If you want to find out more about options trading, head on over to MarketRebellion.com. And remember to follow us, Justin, and Market Rebellion on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching. We'll see you next time on the Trading Floor.